Ladies and gentlemen of the crypto space, we're live on a Friday, February 9th at 12:02 p.m. Cynical Realism. You need to understand something, ladies and gentlemen. The bears are the cynics. They are not cynical enough. You need to right curve the cynicism. You need to understand that the system is beyond perverted. The system is a manifestation of geopolitical collusion, and it is beyond reproach. It is beyond the point of no return. There is no end to moral hazard, and moral hazard has been taken out back and shot in the head. It is gone. It is dead. It is history. The only way for this system to continue is geopolitical collusion, not just at the nation state level, more granularly at the sovereign debt level, at the sovereign currency level, and that will have very obvious implications in risk asset pricing. The cynicism you must have is downright fascinating. You must understand that I understand that the system is broken. It's destined to fail. But to right curve that idea of how disgusting and destined to fail the system is, you need to understand what's required for the system to even continue in its current shape and form. It's going to get gross. It's going to get disgusting. And you're not going to see it, but the amount of currency that exists on the planet, even just dollars, it's going to go absolutely apeshit vertical. And it's not even the currency that you see. It's not M2, M0, whatever you like to inspect if you look at technical charts. You just need to feel it and understand why and the mechanism, the mechanics, how currency is printed and currency is made, which is why we've talked so much over the years about what currency is. And if you understand really what it is, and if you understand really what it is from a cynical perspective, you gotta see what's coming. So the right curve cynicist says, holy shit, it is so gross and bad. It's going to get so crazy. If you think the last bull markets were big, I am so cynically amped up for how downright disgusting it's going to get. I don't think it's going to get gross from a real economy perspective. I think, unfortunately, those days are numbered. I think the real economy is going to lag. And that's not where the currency is going to come from. The currency is going to come from the financial economy. Literally, the regurgitation, recirculation, all that cyclicality of money. And it's going to flow. It's going to flow into all these liquid assets on markets, in equity markets, in the crypto markets. Look at this Bitcoin price. Let's pop up the main screen and see what's going on. Bitcoin's at 47,000. It's pretty much ETF debut price. Now the price is at a premium. Oh, I got my my head is cut off today. Let's see if I can fix this real quick. No, not that one. Clicking the wrong button. I'm going to take that down to 260. Okay, I fixed it. All right, so you're buying at a premium at 47,000, which means let's say it goes to 250,000 and 250,000, I don't give a shit. I don't care about the top number. That's misleading. I care about the next bottom. If the next bottom's at 65,000, it's like, "Oh, that makes sense." Why? Because that's exactly where we were on the last cycle. History doesn't repeat, but it often rhymes. So take a peek here. Say you're a little bit below all-time high. So let's say it's about 60 grand. And that makes a great deal of sense conceptually, no? Let's say you break out and it just goes literally vertical and it's above the screen. You can't even see it. And then crashes to 60 and change. So, how do you play that from a Bitcoin perspective? A whole lot of work because you got to find top. This means you're looking at a whole bunch of crazy indicators. You're looking at money supply, you're looking at interest rates, you're looking at Fed balance sheet movement. You're looking at foreign currency, so the foreign currency cross currency prices. You're looking at the bid and the ask on sovereign debt, and you can find top. You know when you find top in a very relatively simple way, you look in the DXY and you look at the move indicator. So that works, but here's the kicker. Here's the kicker. Here's the most important damn thing, especially the small accounts need to process. You're buying Bitcoin at 47,000 and it goes to quarter mil. Quarter mil's crazy. Now that becomes a serious macro asset and it's changing the face of the planet. It goes to a half a mil. That's even crazier. So what does that mean from your portfolio perspective? Bitcoin just went 5 to 10x on the money. Turn $1,000 into $5,000 or $10,000. Bitcoin's becoming opportunity cost, unless that's your expectation. So make sure you got your head on straight with regard to expectations. Now, when I say I'm fond of lowered expectations, shit, 5 to 10x in the crypto market, you got some serious lowered expectations. I would say there is a great deal of reason to have a higher expectation than a 5 to 10x. So all that matters is that you're reasonable and you're able to meet or exceed your expectations, because if you don't, you find yourself disappointed. Don't be disappointed. No, I think you could see George now. Yeah, I could confirm you could see now. Um, so that leaves us with the concept of why to allocate capital outside of Bitcoin, and what are the narratives, and that's something we talk about all the time. And money is the innovation, the concept of scarce assets, and how these assets bleed over between currencies and equities and dividends and yields and precious metals, and it has all of these wide variety of attributes, and it's competing from a sovereign economy perspective. I very much look at crypto markets as a nation state. Now, these protocols that you clearly see on the right-hand side, my watch list, are very much conducive with enterprise operations, which typically manifest in the form of equities on a stock market of sorts. So that is the best inspection that I could offer to you guys, or the simplest statement I could make for how to inspect these systems for the potential to assess a reasonable valuation. Now, that's what everyone does. When you do a startup, when you do a business, you're a banker and you're looking for an investment, you're trying to determine what the fair market value is at a future point in time. Now, traditionally, you use cash flow. You use, uh, 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 the multiples, price to earnings, and you're able to relative to the peers. It's like tech, what, 10 to 1? 20 to 1? I mean, some of the crazy shit in tech is running at 100 to 1. That's certainly not a reasonable expectation. But that is the point. The point is you're able to get a basic frame of reference, and that's how you construct a portfolio, by assessing what the potential multiples are. And that's from a principal standpoint. That's not even considering the calculations for a revenue standpoint, for the yield on these potential assets that you're considering, and these assets are quite exciting. So I am so damn cynical that I am so damn bullish looking at these businesses that are in an emerging market, and I see how bad it is in China, which is collapsing. The economy is deflating at minus 0.8%. There's no deflation. There's no deflation allowed in a debt-based system, because that spirals out of control really damn quick. Japan's on the precipice as well. And those are the big boys. Why are those the big boys? Because that's where the demand is. Those are the buyers of our exported sovereign debt. Now, Europe is going to keep buying our energy, and a lot of places buy our energy. We're a big exporter. So, frankly, the U.S. looks like a relatively less dirty shirt, all things considered, and a big ass pile of laundry, because everyone wants our shit, whether it's debt or energy. It's not like we have a lot of manufacturing, relatively speaking. So the system is going to keep going. The dollar is going to continue to exist for decades to come. They're going to keep buying our debt. It's going to get absolutely disgusting. Wait until you see the Fed balance sheet at 12, 14, 16, 18, 20, 40, 50 trillion. It's going to be absolutely gross. So wait till you see the national debt at 30, 40, 50, 60, 100, 150, 200. And it's just, and it becomes numbers that are clearly unsustainable. But what's the alternative? The alternative is, do they have an alternative? Is there even a history in the world where they were able to seamlessly transition one economy into another? What does that even mean? How do you transition an economy? An economy is all these moving parts. There's no alternative except to make the system more perverted, patch over insolvencies, kick the can down the road, and they will do whatever they have to. And they're going to be buying JGBs. I don't know what they'll do with China, but we're clearly still entirely dependent on China's exports. And then Taiwan is another story. So we're going to see a big build out of semiconductors in the United States. Mexico is going to get spun up as a manufacturing hub to replace China. That's going to be very interesting, actually. And this will all happen over the coming decades. This is not, the bears will be like, it's going to crash. All right, then what? I'm not interested in the crash. I'm interested in what happens after the crash. I mean, if it crashes in 12 months, I don't give a shit. I care about 18 months. I care about 24 months. You have to look past the noise. And if you're bearish, you're not looking far enough. You are not cynical enough. You need to get more right curve cynical. Go to an extreme. That means you got to get a little bit crazy to peer through all the bullshit. It's going to get absolutely gross. We've seen it time and time again, except this time, all the conditions, all the macroeconomic conditions indicate there's going to be so much more currency in the system. And they're going to be so more desperate to finance social civility. And that's just going to lather on more and more currency in us to paper over the social unrest, to give the illusion that there is something normal at the real economy level. And it's not. So that's the biggest thing of the bears. They look at the real economy and it looks horrible. And that's the case. So what is required from a financial collusion perspective to keep a devastated real economy experiencing demographic collapse pretty much everywhere, especially Japan, certainly China, and even in the United States, which is why the southern border is completely open. They're trying to pad the demographic collapse. You paper over it from a real economy perspective because no matter what happens in the real economy, you need the financial economy to finance um, nominal GDP requirements so that you could keep the debt, uh, the debt regime expanding. You need to be able to finance interest payments. It's really as simple as that, the equation why Bitcoin's price will go up over time. And as Bitcoin's price goes up over time, it will bolster and support basically the entire ecosystem. So clearly you could get outperformance by timing the market. You could get outperformance by being early, but you are going to seriously outperform any equity market in any sovereign nation by engaging with the businesses in this emerging market. If you want to call these equities, what I'm looking at here, you want to call them stocks. But they're better than stocks. They are more real than stocks. Stocks have been perverted. I don't want to go as far and say they were always perverted, but Warren Buffett always said that owning stock is owning a piece of a company. Not today. You don't own shit. You have no power, you have no voting rights, and most of the time you have absolutely no cash flow. So you literally own shit. What happened was you were used as exit liquidity for either the company to execute a capital raise or an early VC allocation to dump on the general public. And what's that called? It's called an IPO. What's that called in crypto land? That's called an ICO. So, man, that's just the bottom line. These companies, these businesses, these stocks that we're looking at are much more interesting. So you got to assess the valuations. Got to be forward looking, 12, 18 months, and you got to look at the cash flow. So here's cash flow. This is an interesting one. Fees and revenue. Um, is it fees and revenue that I wanted to look at? Volume. Volume's interesting. I mean, all of this stuff is interesting. But if you look at Ethereum mainnet, here's fees and revenue. This is what all the big boys will look at, and they'll see it because this is the profitability of the business. And and the big boys aren't necessarily looking at this from a cash flow perspective. These are micro cap assets, 700, $1 billion, 2 billion. These are small cap assets. I don't even think that's in mid cap territory. Mid cap, the equities market is much higher. But the point is, they're looking at this relative to the market cap to assess fair pricing, and uh, and they're going to apply multiples. And generally, none of these businesses are fairly priced, and that is not even from and that's from a principal perspective, like the asset price going up. So you can play that from a capital gains perspective, and that's just generally the sentiment that everything is going to run multiples. And if Bitcoin's going to run 5, 10x in multiples, everything else is going to just run disgusting multiples. 100x on the money. That's crazy. We've seen it time and time again, except this time is different. It is so different for so many reasons. There was none of this in 2019. None of these businesses existed. None of this cash flow existed. None of these fees existed. None of this demand for a service and a product existed. But it certainly exists today. Um, yeah, man, it's got to be YouTube stuff going on. YouTube funny business. Volumes are interesting. Volumes give you another perspective on everything. So mainnet is quite intriguing. Uniswap still dominant. PancakeSwap doing what it's doing on mainnet. I don't know. That's all. So let's go to Ethereum and see the list. That's my bad right there. This makes better sense. Uniswap curve. I don't know how Dodo does this shit on mainnet, but it is what it is. Balancer still doing 62.8. That's big numbers. Pancake token lawn. Sounds familiar. But solidly is a new item on the list with so that's like 99. That's artificial. You don't have 99 volume to TVL. That's crazy. Dodo at 418. Something's off. The only one in here that looks relatively high compared to the big boys is solidly at 1.9, which certainly caught my eye. Everything else is, oh, so hash flow. Hash flow has always been interesting to me, and they've had some nice deals over the years, so I always keep my eye on it. I don't think there's any cash flow from an opportunity perspective, so it's never been entertained by me as a potential position, but it is certainly interesting. Maverick, Integral, look at that Frax down at 0.67 because they do have Frax swap, 3 mil, their swap implementation. Everything else is marginal. It's a rounding error. Millions of what count. Anything in the hundreds of thousands is just trying to figure out what the hell they're doing. Um, let's look at DeFi for a second. Then we'll go over to stablecoins. Uh, stablecoins is the best inspection. This is how you inspect the different markets. You're looking at chains, you're looking at optimism, you're looking at Celestia, you're looking at what? You're looking at New Dimension, you're looking at Arbitrum, you're looking at Solana, you're looking at Phantom, you're looking at Avalanche. How many stablecoins are on the chain? This is a great inspection for potential in a particular market. More stablecoins, more of a positive sum environment, more cash to allocate to assets, more multiples those assets will run. It's pretty much the way I'm going to frame everything I'm talking about with regard to crypto assets going forward. How many multiples they're going to run? Equity markets land is probably getting accustomed to multiples at this point with all the shit that Nvidia is doing. But this is very commonplace and will be much more exacerbated in crypto markets, considering it is much smaller liquidity base, much smaller amount of capital, and smaller market caps, so it's much easier to run multiples. Multiples are going to be gross. 610 mil on optimism. Avalanche still hovering at a bill. Let's see what Arbitrum 217. It's been about neutral. 285 in the week. That's a nice positive sum environment to see. What's Solana? 224 still outpacing Arbitrum. 1.87 positive sum in the week. Arbitrum and Solana, I think, are going to be a very interesting experience over the next couple of years. Phantom, the underdog, very volatile because you have 14% outflow weeks. So this has been big volatility in total amount of stables. But it's an underdog. I think a lot of folks want to see it succeed. Kava is an underdog as well. It's basically where all the stables are from a Cosmos Hub perspective. So if you're dealing with stables on Osmosis, this is where they're from. Because Kava and Noble have they have the stables. So that then they go over to IBC and then they go over to Osmosis and that's where they're from. So it's something to consider. Marginally positive sum, but it's a micro emerging market. It's an emerging market of emerging markets, as I talk about, and which makes it crazier is that Cosmos hubs are an emerging market of emerging markets. So you put all this shit together, and I don't even know what kind of language can best be used to describe the recursiveness of the emerging market degreeedness or something like that. If you're looking at this stuff as I do from a sovereign nation state perspective, as maybe it's like jurisdictions, states, counties, and just all the states and all the counties are just exploding with capital activity, capital inflow, and just new financial products and services, primarily from a credit and foreign exchange perspective, and derivatives thereof of credit and foreign exchange products. And that's the business inspection. Absolutely insane. I just get amped up talking about this stuff every time I get a chance to talk on a stream. Marginally positive sum, 1%. Ethereum's up to 70 bill. Finally back above 70 bill. The entire market is still down significantly from all-time highs, but your low is around 123 bill. All-time high was 187. Where do you think we go next? Half a trill? Trill? Do you know what kind of positive sum environment you'd have with we're at 136 bill. If we go to 150 bill, 200 bill, you know what kind of positive sum environment that would be? You know what kind of multiples would occur on 50 mil market cap, 100 mil market cap, 200 mil market cap? Less than a bill market cap assets? You know what kind of multiple? Because it's not a multiple just on the amount of stable coins that came in. It's multiples in TVL and valuation. So the multiples in valuation are multiples of the amount of stablecoin exogenous inflows because you have to count for endogenous money creation processes, the credit processes, just the organic capital expansion process. And this is where you would look at maybe TVL, which is going to be multiples of stablecoin availability, 136 bill. And in DeFi, there is 65 bill. That doesn't make much sense. That doesn't make much sense at all. So I think inspections only go so far, but that doesn't make much because well maybe total value locked, but you have to look at total market cap, which would be I have no idea. But that's what I'm thinking about. How many multiples is total market cap on total stablecoin M cap? Hmm. Oh, is this Lido? No, Lido dominance. I don't know. I don't know. George is in the house. A pleasure. Mix is in the house. We can't see you. All good now. MN stream doesn't appear. Good stuff. Diego's in the house. Much a pleasure. 22 people in the stream. 7 likes. Press that thumbs up button. Throw all your questions in the chat. We don't leave any question unanswered. Let's go back to the chart. Let's go down the list. Fractal just launched. Very exciting. Mainnet is going live sooner rather than later. Real World Abs, first meme coin on Fractal. Very interesting. You guys know my opinion about Frax in general. curve back up to 49 cents. Stargate's just cyclical between 60 cents and 50 cents, not going anywhere. Syscoin never catches a bid that it'll eventually catch its big bid, but that's going to take some time. It's off the radar. It's literally a Bitcoin L2 narrative, and Bitcoin's going to lag with regard to smart contract, not FOMO, but smart contract interest. All that activity is much more comfortable on the other EVM chains, albeit you're literally looking at Bitcoin EVM for simplicity's sake, how to describe what Syscoin and Rolux do for Bitcoin and the network. Look at Celestia, says at 798. TIA broke 20, very interesting. Dimension, $7, a little marginally down on the day. It was high as 750. And crazy start. The activity that's on Dimension could be very interesting. Was it the ERC 404s are hot? That's an interesting topic. Man, there's too much of a laundry list of shit to cover. How do you even begin understanding this market, yet alone the topics that we've discussed on this stream for the last couple of years? How do you condense it into a couple of sentences to try and educate someone? I sometimes struggle talking to friends, not necessarily family, never talk to family about crypto, but trying to talk to friends and really distill all the stuff we talk about into few words, not to overwhelm people. Wife always says, know your audience. Diego, you mentioned preferring to own tokens that provide weekly or monthly payments by staking. So why hold FXS if it's currently offered very low staking rewards? Well, you get about 4% of the money on a vote market, which is marginal, obviously, and you get another 1, 2, 3% on VEFXS vis-a-vis stake position on their portal. And it's a speculative forward-looking return given the fractal environment. The EFXS is designed to receive all the production or the productive capacity of the Frax ecosystem. So when everything gets configured as defined for the fractal chain, VEFXS will receive that cash flow. Now that's forward looking. Let's say all of a sudden 20% gets priced in. The market price for Frax FXS gets repriced really quickly. Now obviously you could wait and put in the work and try and front run that kind of repricing. And that's literally an argument of to own it now versus own it in the future and inspect the technicals and wait for the sign for a vol spike or a breakout of trend. I mean, a nice breakout of trend would be about $11, and you're finally above the 10 SMA in the 3-month. That's a very high time frame for most people. But in my opinion, we're past that for everything. We're past that for Ethereum. We're past that for Bitcoin. This is broken out of the monthly time-weighted average price. The time to own this was $5 at the bottom. This is a series of higher lows. It's very interesting. It's higher high, higher low in the monthly at a structural resistance level indicated by the green line. And if you're coming off lows, you're up 279% in 900 days. So that's the equation that I like to look at. It's trying to find the things that you want and then determining what is an effective price to acquire it. And the effective price, I think of from a future low perspective, cyclical low, let's say Q3, Q4 2025, Q1 2026. Where are the lows going to be? For instance, from a Bitcoin perspective, if the lows are going to be 60K, you're talking about 20%, 25% return from an allocation from here, but there's no cash flow in between. So literally, you have to sit in front of your computer and try and sell it at the high. And that requires a fair amount of work, speculation, and macroeconomic inspection to assess what is a high. When would Bitcoin roll over from its highs? So the highs I'm not interested in. I'm much more interested in the lows because I don't want to sell things. I want to own things and check back in 2030 and hopefully get paid in the meantime. Shish, thanks for the double stream today. Much appreciated. Yeah, it's always a good one with Ben. Ben has a great macro mind. Always get a pleasure talking with him. Very much look forward to him and his team's tapioca protocol that's coming soon. I would imagine March, April, maybe. I don't think February anymore. I got some more spit, shine, and polish to do. But the most important thing with the protocol is that it works flawlessly, especially when it's immutable and contracts can't be changed. So you got to get everything right. Then and only then can you do marketing, social media to get the hype, so on and so forth. It needs to work flawlessly. It's just like any piece of software. And especially with financials, if you mess up once, there's very oftentimes no coming back from such an issue, such an event. Um, Osmo Atom, strong entire Cosmos Hub ecosystem is just strong. Look at Celestia just hovering at 20 bucks. Just wild. Now the most important thing is in a bull market, yeah, sure, it keeps going higher and higher. Folks quickly forget what it's like to go down and down. Folks that are entering now uh, probably weren't here for 22, probably weren't here for 2018 and 19 and earlier, like 2014. Just once it starts going down, it just keeps going down and it doesn't stop. And that's when I come out at the end of 2021 and say, yeah, it's going to go down further than you could possibly believe, and then it's going to keep on going. But fortunately, that's not where we are in the cycle. That's not where we are in the market. I think we have a sell off, and I think it's relatively lofty, relatively supported. You get a mean regression. Mean regression may be two, maybe a weekly, maybe a daily. Daily time weighted average price is 43,000. We were just there. So from here at 47, that would be interesting. But we literally were just there. That we were up at 47 when the ETF launched, and we did a fat mean regression down to 38,000, bouncing right off. I don't have my labels on, but what is the purple line? I got all new colors going on. Purple line is it's the blue line. 3. Oh my God, I don't even know what my is that the 100? It's 100 SMA. Oh, that's why. Overlapping is making it purple. That's interesting. It's 100 SMA. Oh, look at that. Isn't that beautiful? This is why moving average is so meaningful. It was literally just a 100 SMA mean regression. So the ETF launched and you're at 49,000 at this blow off top that's a shooting star on the daily, and you mean regressed at 100 SMA and it just bounced right off it. Everything has a bid price where it's cheap enough that you get the directionality reversal back to the upside. And that's very interesting to inspect. The longer the time frame you go out, this was somewhat of a 50 SMA, somewhat of a time weighted average price. Well, you know what I get a kick out of is look at the convergence on the weekly. Let's go further out even to the monthly. Look at the convergence of the moving averages. 100 is a bit of an outlier, but look at the 50 and the time weighted average price, and here's the 50, the 10, and the time weighted average price, and you have this whole interaction between the moving averages, and that's literally confluence of a mean regression. Certainly a premium from a monthly perspective. You could easily see a mean regression back to 31,000, and the chart certainly looks relatively strong. Obviously, coming off the 31,000, you want to see not a lower high, because lower highs breed lower lows, but you would want to see a higher high. So if you got mean regression to the 31, boop, 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 and you certainly don't want to see it peter out here, because then you print the lower low. What you want to do is you want to see it print the higher high, and then turn around and turn that previous resistance into support. Resistance with support is key component of the trifecta of bullish confluence. Breakout to a higher high, retest of a previous resistance, flip at support, and then bam, trifecta is then the higher high. Breakout, retest, resistance, flip, support. And that is the directionality you want to chase. Now, the inspection that I make is I don't like to chase that directionality. I'm more interested in where the structural cyclical low will be. And that looks right about there, around 61,000. Off top 250, crashed down to 61. Everyone in meat space is screaming, Bitcoin's crashing because 250 down to 60 is one heck of a crash. But lo and behold, you're up 25% of the money from an entry at this price. And if you're in at 15,000, which is an opportune price, that is a discounted price. You're up 400% on the money. So what does that mean? Better get a good price. Better get a good entry. Better get the position sizes right. Otherwise, you're shooting yourself in the foot from an opportunity cost perspective and diminishing returns. Hope that helps. Hope that helps. Um, Anything else interesting, you guys, in the market? 24 people on the stream. What's on your mind? Give me a couple of things to chat about. Um, what else is hot? It's really ERC, the 404s. That's hot. Base is it's kind of boring in my opinion. Um, Optimism, interesting stuff. Very interested in Fraxel. That's really caught my attention. What else is going on Cosmos Hubs? I don't really know other than Dimension. Everyone's looking forward to the Dimension launch. That's about it. Raul, hello. Much appreciated. Welcome, welcome. Waiting on Namada. That's coming. 26 Clouds. This is an ALEF type of product. Concentrator, a little boring. Something I just hold on to. Where at Gwei? I haven't been using Frame. I've been using Ravi, so I don't have a toolbar Gwei indicator. 76 Gwei. Prices on mainnet have been a little pricey, which is why I'm looking at Arbitrum and Solana is extremely efficient on price action to engage with those markets, but they're very small markets compared to mainnet, so you can not have necessarily the same amount of financial activity. Albeit we have our exposure. I bought so I have Hero for Solana exposure, but I have Parify for Arbitrum exposure. Let me get you the ticker. I don't know if it means anything to you guys, but for what it's worth. So I didn't want something old. I went for something new. So the Fjord Foundry has new protocols coming online. This is basically capital raises, ICOs of sorts, but the ICOs are obviously not the same as they were back in 16 and 17. These are actual products. And if this product does what it does, it's a perp DEX on Arbitrum, which is literally the home of GMX, but there's plenty of room for competition in this stuff. And this stuff interests me when you're at, $100 to $500,000 worth of raise. Microscopic market caps, 237K in the market cap. So anything catches a bid, hits the ground running, and you got 5 mil market cap, you're running multiples on your LBP purchase. Not much interesting right here, but in my opinion, and I don't mean that to discount the potential for this stuff, but you gotta be very picky when you're giving cash. This is literally by definition capital formation. This is all the stuff that the SEC wants to regulate. But fortunately, it's in international territory in an emerging market somewhere on the planet, yet nowhere on the planet. So I like this. Gushers, XYZ, yeah. So jurisdiction restrictions, so that's obviously nothing that Moldova couldn't cure. So just Go to another country. Geopolitical arbitrage. Why don't you? Where's what the hell's Aura doing with its tokenomics? Because it has been destroyed from a price action standpoint. I don't have its chart up. Here we go. Is it at 69 cents? Let's go over to CoinGecko. It's Orabao here. 70 cents. Oh dear Lord. Come on, come on. I heard they're doing big things. So I'm hopeful. Do I got some hope? I need some hope for the Aura bag. Still prints very nicely, but it needs to change the directionality. Literally, it's a fair amount of opportunity cost, relatively speaking, because other protocols have been outperforming, and his is clearly just straight down. Um, and it needs to change that directionality to at least be higher highs and higher lows, even marginally, because Balancer's still doing what it's doing, which is fascinating. So it's clearly a go-to destination for liquidity. So it's an integral component in the system, just hasn't received a lot of attention lately. Justin? Oh, good old Justin Sun. I can't believe that guy does what he does. Just lend. Bond market oh, selling off. That's probably why we've 47.5. Look at the Bitcoin price. Woo! That is exciting to see. Let's see if we can push back up above 2,500 for Ethereum. Marginally down on Ethereum Bitcoin denominator, 1.68% for the day. Solana clearly above 100, 105 at this point. It's just a lovely market. Iris, 16% of the day. When this thing comes back, it's 10x. It's 90% down on the money. A couple of folks in our Discord get a kick out of this. This has an interesting story behind it. It's the BSN narrative, the China or the Asian narrative more broadly. This thing was up at 1050. What? Wait. Yeah. No. Yeah. It was up at 1080. All right. Some pullback. Was Fractal next month, March? That's going to be very interesting. We'll see how reflexive it is and how much capital it draws in. But I think there's going to be a lot of incentives, and where there's incentives, there's capital flows. All right, you guys are quiet today in the comment section, but I appreciate all of you always. Tell everyone to subscribe. That we'll get more comments, more commentary from me in response to said comments. More fun, more interaction. But today is Friday, so it's a low-key day. People are probably on vacation. I wish you guys a wonderful weekend. 23 people made it to the end of the stream. 12 likes. Smack that thumbs up button if you appreciate the content. And I wish you all a wonderful weekend. You know the deal. Link in the description for the most rational community in the entire crypto space. And I will see you guys next week on a Monday. Peace.